The market looks very weak. The biggest losers today were the tech stocks. The Nasdaq was down 3% on the day, although we're not below Monday's low, but that low looks like it is in jeopardy. The Russell 2000, though, in contrast, which was also down 3% today, as I said on my last podcast, this is the weakest of the indexes, and I said that the chart looked weakest of all. The Russell 2000 actually closed below its Monday low. That's how weak this index looks, and I think it's going to get beaten up even more. In fact, if you look at the Russell, it's now down 13% on the year, right? That makes it the weakest of the four averages. The Dow down 6.2%. The S&P is still slightly positive. I mean, not even 0.2%. So it's pretty much unchanged. The only real gain is in the Nasdaq, which is still up 18.5% on the year, if you can believe that. And it's down 13%, by the way, from the high earlier this month. But the only reason it is up 18.5% is because you have a handful of bubble stocks that have gotten more bubble-licious over the last few months. I mean, that's what's driving the Nasdaq. You take out this handful of stocks, and it's a completely different story. The question is, how much longer is it going to be before the air comes gushing out of that bubble? One sector that was particularly hard hit again were the financials. I talked about the weakness building up in the financials on the last podcast. One in particular, Wells Fargo, was down about 3.5% today. Wells Fargo is now down 60% from its peak price. And if you look at the chart, it looks like it's headed a lot lower from here. And in fact, when it rains, it pours with respect to Wells Fargo. Its CEO got himself into hot water, first by telling the truth, and then second by having to apologize for telling the truth. Of course, he didn't have to apologize for it. I mean, he was shamed into it by the political correct crowd, right? The Black Lives Matter guys. He made a statement that was totally true, not in the least bit racist, but it pissed off all of the race baiters. And of course, he had to fall on bended knee and beg their forgiveness by apologizing. Let me read the tweet that he sent out that he had to apologize for, right? Or this is what he said, maybe, and I'm reading it on a tweet from NBC News. This is the CEO of Wells Fargo. He said, while it might sound like an excuse, the unfortunate reality is that there is a very limited pool of black talent to recruit from. And what he was responding to was the allegation that Wells Fargo was racist, that their hiring policies were racist, and the proof that they're racist is that they don't have enough black employees at Wells Fargo, right? Now, what the CEO is basically doing is defending the bank by saying, look, we're not racist. That's not the reason that we don't have as many black employees as there are blacks in the overall population. He said it's the talent pool that we're drawing from. That is the problem. We are hiring qualified black applicants in the correct proportions that they exist in the pool that we're recruiting from, but it's not our fault if they're not in the pool, right? You're saying we're not catching fish that aren't even in our pond. We can't catch the fish that aren't in the pond. Now, of course, by telling the truth that there simply aren't enough qualified black applicants for Wells Fargo to meet their goal of the number of black applicants they want to hire, this is what has outraged the political correct class. How dare you have the nerve to come out and say the truth? And so what happened is, rather than defend his truthful statement and the conduct of Wells Fargo, this is what he said today. I'm reading the tweet that did come from Charles Scharf, the Wells Fargo CEO. He wrote, quote, "I'm sorry my comment has been misinterpreted. The financial industry and our company do not reflect the diversity of our population. We at Wells Fargo are committed to driving change and improving diversity and inclusion." Sure, that's what they want to do, but you can't expect Wells Fargo to hire people who are not qualified for the job. They're basically saying we're making an effort to recruit black employees. We just haven't been able to find as many as we want who have applied for jobs who are qualified to fill the positions that they've applied to. Now, apparently that's not enough, right? Because what this crowd wants is for Wells Fargo to hire black applicants, even if they're not qualified, even if they're not able to do the job that they're going to be hired to do, they should hire them anyway, right? So in other words, we should have a bunch of token blacks working at Wells Fargo, because if they're not really qualified for the job, Wells Fargo is going to have to hire somebody else to do the job that they're not qualified for. So why are they being hired? Just to be there? Just so Wells Fargo can say, hey, look, we've got these black employees? The problem is, why is the talent pool so shallow? Why aren't there more blacks in that pool? Why aren't they qualified for these positions? That's not Wells Fargo's fault. Wells Fargo's not responsible for the people who apply for their jobs or their qualifications for the jobs that they're looking to fill. No. Instead, why doesn't the African American community accept some responsibility for their failure to prepare people to qualify for these positions? Why don't they blame the public school system for its failure to educate people to the point where they're qualified for these jobs? But now Wells Fargo has to pretend that none of this exists. They have to apologize when they've done nothing wrong to appease a mob and just commit to hiring more black applicants, even if those applicants are not qualified for the jobs that they're hiring to perform. How is this good for American industry? It's not. How is this good for the American economy? It's not. How is this actually good for African Americans? It's not. It's bad for everybody. And it's going to lead to a less efficient, less productive economy that will ultimately end up hurting everybody. And if you want to send out a message to African Americans, hey, you don't have to be qualified for a job. Just rely on your blackness. You don't have to do what it takes to actually prepare for a job. Just expect to get hired simply because you're black. What kind of message is that sending? That is a very counterproductive message. And the problem is not with Wells Fargo for telling the truth, but the problem lies with the African American community for not acknowledging the truth and being a little bit more self-reflective instead of just blaming other people for problems that they're creating. And of course, not just stocks that went down today, but gold and silver getting hammered again for the second time this week. They were down actually a little bit yesterday as well, but nothing like what we saw on Monday or what we saw again today. Gold prices down almost $40, call it $40 on the day. Silver down even more, down about $1.60. In fact, if you now look at the decline we've seen in these metals, gold is now down about 10% from its high this year, its all-time record high, and silver is off about 23%, technically putting it into a bear market if you want to count anything more than 20% as a bear market. The gold and silver mining stocks, they're almost there. The GDX is now down 18% from its high this year. The GDXJ, which are the juniors, that index is now down 19.5%. So it's a pretty good possibility that both these indexes will officially be in bear market territory before the end of the week, maybe even by tomorrow. Personally, though, I don't think there's a lot more to go to the downside in gold and silver. I said on Monday that I thought we had a little bit of room to fall for some follow through, but I do expect some significant buying to come in. But clearly, there is a lot of hot money in the market, and it's not that that hot money hasn't found its way into the gold and silver market. You know, I have a lot of clients that email me and I see questions on my social media. Hey, why is gold down so much today? Why is silver down so much today? And there's going to be a lot of short-term volatility in any market when you have the amount of hot money in the markets that we have today, thanks to the Federal Reserve. Speculative money is very cheap to come by, so there's a lot of it being invested. And the thing about the mining stocks is a lot of the bigger money that is being invested, this isn't high conviction money. These aren't people who have been in these gold stocks for years or maybe a decade or more and who understand the end game. This is hot money that has been attracted to the sector simply because it's done so well recently. And so when a sector does well, it tends to attract more hot money that wants to jump on the trend, hoping to, get some profits. And remember, a lot of these guys are trading on leverage, and a lot of times it's other people's money. So they have a lot of incentives if they really think a market is hot. It's kind of like, if you're in a casino and there's a crap table and everybody's excited, everybody's making noise because, you got a hot shooter and everybody's winning. Well, then people tend to leave the other crap tables and join that one because they want to get in on that action. So I do think that happened to an extent in the mining sector and in the gold space. And so whenever there's a downturn, it gets exaggerated. But again, I think it's a bullish indicator that you don't have that much conviction on the part of a lot of these longs. I mean, they're very scared. I think there's more fear in the gold market, certainly in the mining stock market, than there is greed. And I think that simply reflects the wall of worry that this bull market continues to climb, because I don't think there's ever been a fundamental backdrop that has been stronger for gold and silver. As far as the outlook and how high these prices are ultimately going to go, we've never really been in a period of time where the outlook has been more bullish. Yet despite how bullish the outlook is, you don't have that sentiment shared by investors. They're more nervous, they're worried, they've got one foot out the door. Eventually, that's going to change. I mean, we've had a very strong market despite all the backing and filling, right? We've had a nice uptrend in these stocks for several years, but that's with the buyers not really being that bullish. Imagine what's going to happen in this market when the buyers become full-blown bulls. I mean, like me, when they have some conviction behind this trade and they're not so scared of every downturn, when they're looking for any slight downturn as a buying opportunity. Like when we get the same type of conviction in the mining stocks that we have in some of these tech stocks, right, which barely have any corrections because there's so much money on the sidelines waiting to come in. We don't have that yet in gold and silver. We certainly don't have it yet in the mining sector, but it's coming. It's going to be there, but it's down the line. And I think it's going to happen at significantly higher prices than those that exist today. So in the meantime, just take advantage of their lack of understanding and their fear, their nervousness behind their positions. And when they're selling, you buy. Just use these dips as buying opportunities. Don't worry if the dips get bigger and the buying opportunities get better. Doesn't matter, so long as you take advantage of one of them. Even if somebody else gets a better buy than you, what difference does it make? All that matters is that you get a good buy, and don't worry if somebody else gets a better buy.